Taking a look at the interest rate market today, let's focus on the 10-year note to start the week. The 10-year note, another strong move today to the upside. Sixth consecutive day of upward price movement, and the 10-year currently right around the 130.03 level. So again, we're seeing after the big selling pressure late in the week, after the ECB announcement a week and a half ago, we have seen the 10-year now find some buying pressure, and you're seeing that across all the durations as well. So we saw most of the durations rallying pretty strongly today. I do want to point out that we did see an intraday high though of 113.5. So again, we did come off at least the highs of the day, but still maintain this upward trajectory over the last 6 days. Looking at the yields, 10-year yield right around the 1.71 level right now. Now we did see a low yield today of 1.66, and I think to put this in perspective, let's look at the yields over the last couple of months. We saw a high yield last week of 1.90, and then the low yield in this move that the market's encountered the last couple of months of 1.43. So we're kind of in the middle of this range now for the last month and a half or so, and I think it's interesting to point out that that 1.66 is basically right in the middle of that range. So it could be a tipping point here as we continue to see the bond market pricing in some of the dynamics for the week ahead. And I think when you look at what the bond market is playing off right now, there's a few factors from the data. We had the European data come out overnight, German factory data very weak, and we saw the bond markets rally because of that weak data. Now we did see a little bit of a counter to that in the U.S., and I think that's why we saw a little bit of selling pressure after we did see the spike in the bond market earlier today. When we look at the U.S. numbers coming out, the PMI numbers, a little bit stronger than expected. So again, countering some of that weakness that we saw out of Germany and Europe overnight. Also, a lot of Fed speak today as well. The market's contending with that. We did have the ECB leader, Draghi, one of his last speeches, and indicating they should explore different types of monetary theory and policy, possibly moving forward, than other things that they have not explored to this point. And we're also getting a lot of Fed speak talking about the dynamics within the current interest rate environment and how it's playing in the economic structure, and that's creating some of this volatility as well. But currently, we did see a 6th straight day of rallies for the 10-year note to start the week.